So guys, in our leases, we have done with the basics of 116, sir. Now we have to go into core accounting of 116. So put the heading, guys, accounting in the books of Lessee. Sir, in this accounting, the main and the core point, I have already discussed it with you. So go on writing that. Lessee shall recognize a right of use asset and a lease liability. So the entry would be ROU asset account debit and give a credit to the lease liability. Now the only twist is entry should be recorded with what amount. So how the standard has explained it is, first a lease liability ka measurement they have discussed. Later on ROU asset ka measurement also they have discussed. So why to discuss two times? Won't they both be at the same amount, because it's only a single entry there. They may be same, they may not be same. So the number what you write against the asset and the amount what you write against the liability may and may not be same. So that clarity naturally will come if you go further about the lease liability part. So B point, sir. Lease liability shall be recognized at present value of lease payments. Now, normally when we casually talk about leases, we call this as a lease rent. But the standard does not use the word lease rent as it uses the term called as lease payments. So in this, all kind of payments you make under the lease are covered. So entry, if you have to write now, sir, first you have to do an exercise. That is, first understand what are all the lease payments in the entire life of the lease term, what are the lease payments, and discount all that to today, a present value to entry you have to write. So for this, automatically you should understand what is the meaning of lease payment. So, sir, lease payment definition I will make you write later on, sir. Time being, just watch. Now, lease payment, I'll make you write this later on in a chart. Okay, time being, watch. It includes fixed lease payments. Fixed lease payment is a normal one, sir. Like, when I take a building on lease, every month I pay a rent of 1 lakh, or every year I pay a rent of 8 lakhs, like that, the amount is fixed. Or, not or, and in substance, fixed payments. Sir, in substance fixed payment, and why I am telling is, there might be some payments which might sound like variable, but in that also some character of fixed rent will be there. That sort of rent also you should consider here. Example, sir. Okay, there are examples I'll give you officially later on. Timing a small example. Sir, suppose I tell you that if it rains today, I pay you 3,000. If it doesn't rain, I'll pay you 2,000. It's variable or fixed payment. If it rains, I'll pay you 3,000. If it doesn't rain, I'll pay you 2,000. It's variable or fixed? There is a variable element in it, but there is also a fixed element in it. Because irrespective of whether it rains or not, I still have to pay you. Our 2,000 is called as in substance lease payments. That type of, it sounds like variable, but in that also some element will be fixed. Our fixed lease payments, you have to include it as a part of our lease payment. Okay, this is one thing. Second, sir, is variable lease payment based on index or market interest rate. So for example, you tell me like this, sir, every year lease rent fixed is 10 lakhs, but each year ka lease rent will increase at the rate of inflation rate in the market. So at the end of each year, lessor will go and see a already defined inflation index. Our inflation index, suppose it says 8%. So current year if I pay 10 lakhs, next year we will be paying 10 lakhs 80,000. So our third year, how will you pay, sir? Then second year ending, we will go and see what is the inflation rate. That will apply on second year rent like that. So here, a first initial 10 lakhs part is fine, but the remaining whatever is fluctuating because of the inflation, that is called as the variable lease payment. Okay, and this variable lease payment, you should include it in the lease payment only if it is based on some index or a market interest rate. Now for example, you tell me that, sir, lease rent 10 lakhs, every year it will increase only at the rate of 10%. Constantly every year 10%, 10%, 10%, 10%. That's variable or fixed? 10 lakhs rents are base, every year 10% will increase. Now the lease rent is called as variable rent, fixed rent, fixed. That comes into the first one, that also will be included. Suppose if you say lease rent 10 lakhs, every year lease rent will increase at the rate of LIBOR in the market. LIBOR is London Interbank Offering Rate. So market interest rate, every year lease rent is going to increase. This is called as a variable payment. I'll tell you another case. So for example, I took a machine on rent. Okay. A machine ki fixed lease rent, I have to pay 5 lakhs per annum. Then for production units exceeding 50,000, I have to pay rupees 2 per unit rent. Extra I have to pay. You observe how many type of rents are there? 5 lakhs compulsorily I have to pay. But that's not it. So there's something else I got to pay. What is that? Once I start manufacturing units more than 50,000 using this machine, I excess unit with every unit ki 2 rupees I have to pay. This is also variable. Very clearly this is variable. This type is variable, but this type of variable rent is not to be included in this. Lease payment definition you observe closely. Lease payment includes variable lease payments based on index or market interest rate, not based on usage of the asset, performance of the asset, production units, number of customers. These type of rents are definitely variable rents. There is no doubt on that. That lessee has to pay to the lessor, correct? But that is not supposed to be included in your lease payment definition. If you are not including this in your lease payment definition, if this is not included in this lease payment definition, that means a lease liability is nothing but the present value of these lease payments. No, that means a lease liability low, E type of lease rents will not be included. So then what is the treatment for this? Throw it off in P&L directly. For this there is no need to do any estimation and then discount it and all. Just whenever you pay this extra rent, just throw it off that into P&L account. So these two are basics. Then there are extra points also, like option price to purchase the asset. What is the meaning of option price to purchase the asset is, sir, I have taken the asset on lease for a period of 3 years. Asset life 10 years. You leave it. But my lease period is only 3 years. So I pay 1 lakh rent here, I pay 1 lakh rent here, I pay 1 lakh rent here. After this, normally the asset will go back to the lessor. But on the starting date only, lessor and lessee in their agreement what they wrote is, after the end of the lease term, if the lessee wants, he can pay 5 lakh rupees and buy the asset. That means 1 lakh is for what? For using the asset. First year, second year, third year. Third year ending, ideally the asset will go back to the lessor. But if the lessee wants, he can pay some amount and buy the asset himself. The option was given to him at the commencement date itself. Now, sir, my 5 lakhs should include in my lease payment or not? It depends, sir. If you believe that option is going to be exercised, that means ultimately, are you going to pay this 5 lakhs also? Yes, therefore include. If you believe that no, we are not going to buy this asset, then don't include. So 5 lakhs, whether it will be included or will not be included, it depends on how reasonably certain you are to exercise the option of purchase. So sometimes some cases law will include, some cases law will not include, but you should understand that lease payment law, you should consider this also. Consider in the sense, outrightly no one you should not say. You have to see the facts and circumstances, see the agreement, and then decide whether it is reasonably certain to be included or not. So this is one case. Next in this is termination penalty. What is termination penalty is? Sir, lease agreed is 10 years, sir, normally, but a lease gives an option to the lessee. At the end of 7th year, lessee can cancel the lease. But if he exercises this option, he has to pay penalty of rupees, let us say 50,000. Now, if 50,000 penalty, should it be included in the lease payment or not? This is a very easy question. You tell me, sir. Will you include or will not include? Or depends? Depends on what? Now, in discussion indirectly we had it earlier also, when we were determining the lease term. Now, lease term is 7 years or 10 years, how will you say? 7 years is pakka lease term. Extra 3 years also you will add if it is reasonably certain that the lessee will not exercise that option. If lessee is not going to exercise this option, then lease term is equal to 10 years. In that case, the termination penalty cannot include in there. Why? Anyway, termination is not going to happen. No. Why will you include termination penalty in lease payments? Don't include. On the other side, if you determine that, no sir, it's highly likely that I will cancel the lease agreement at the end of 7th year. In that case, your lease term originally would have been 7 years. And in that case, termination penalty definitely you have to include there. So again, it depends, sir. Like how option purchase price, whether to include or not, it depends on whether you are going to buy or not, like that. Termination penalty will be included in lease payments depending on whether you are going to terminate the contract or not. Okay, next. Guaranteed residual value. What is this guaranteed residual? In fact, some your basic clause it was there, but anyway, I'll tell you freshly. Sir, there is an asset. Our asset life is 10 years, sir. But I took the asset on lease only for a period of 3 years. I don't intend to buy this asset at the end of 3rd year. Asset will definitely go back to the lessor after 3 years period. Now, since I am paying rent for using the asset, let's say how he will think. The asset what he got today is not his asset. He is not the owner of the asset. Moreover, ultimately also asset is not going to stay with him. Asset is going to go back anyway to the lessor. So how will he use the asset, sir? It's not my asset, no sir. I will use it in a very worst possible manner, as if it is somebody else's asset. Even if it is damaged and all, lessor is anyway going to repair and give it to me. So for example, I take a car on lease, sir. First day car was very bright, shining. You can comb my hair also. That shining it was. But after 3 years, which is front, which is back also we are unable to identify. Aa shape ki iskochanu, sir. No, who is at loss here? Lessor. Lessor is definitely at a loss here. So what lessor says is, array 1 lakh, 1 lakh, 1 lakh lease rent you pay. As anyway you will pay. Next, by the end of 3rd year, which is the end of the lease term, you should ensure that the asset should have a guaranteed value of, let us say, 5 lakh rupees. This also lessee agrees. It's not like lessee is saying that I will pay 5 lakhs. Don't misunderstand that. What lessee should promise to the lessor is, array after 3 years you get into this car and come to me. I will also join. We both will go to valuer. Let us get the car valued. A car ka value should be minimum 5 lakhs. If it is not 5 lakhs, a shortfall whatever is there, that you have to pay me. That is the meaning of guaranteed residual value. Suppose you took a car on lease. You learnt driving on that car only. And then you taught many people. Then you took this car to various ghat roads. You participated in various road racings, accidents, photo shoots. All these things you did. Ultimately, car valuation we went, 0 came. ఇంక ఎక్స్ట్రా పడుతుంది సార్ చేతిలోంచి. ఓకే, నౌ టెల్ మీ హౌ మచ్ యూ హ్యావ్ టు పే టు ద లెసర్? 5 lakhs full amount you have to pay. Suppose car worth is 3 lakhs, then I have to pay 2 lakhs. Car worth is 6 lakhs, then we need not pay anything. Sir, we'll get 1 lakh, sir. No. Normally, no, sir. Of course, the agreement can be drafted like that also. There's nothing wrong in that, but normally, no. So, guaranteed residual value, whatever is there, that also you have to include here. Now, when I say, or in the standard says, guaranteed residual value is part of lease payment, don't misunderstand that entire 5 lakhs I will include. I will not include entire 5 lakhs. I will include whatever I am likely to pay. Suppose, first day only, this fellow is able to foresee, at the end of third year, ee car 5 lakhs value will not be there. 4 lakhs, ante 1 more 1 lakh also I have to pay in the form of some compensation to the lessor under the guarantee. That also you have to include, GRV. Then, lease incentives receivable from lessor. Now you see, I'll tell you what is lease incentive. Fixed lease payment, cash outflow. Variable lease payment, outflow. Option price, in case you exercise, outflow. Termination penalty, outflow. GRV, in case you have to pay, outflow. Ivanni outflow, sir. Last one alone is an inflow. This lease incentive means for joining the party, for joining the lease contract as a lessee, the lessor gives you some kind of benefits. If these benefits are going to come after the commencement of lease, then from the lease rents you have to minus this. Normally, all these are your outflows. You add all this. This alone you have to minus. Lease incentive is a kind of benefit which the lessor gives to the lessee for joining the lease. Sir, why will lessor give, sir? Why will lessor give means, of late, after this COVID situation and all, you casually go on the main road, you see all big malls lo to let is there. Big malls lo vacant places are there, sir. Many shops, many showrooms they have vacated. They are not earning any rental income. No, the big malls ka people what they are doing is reasonably medium sized shops and all which are there in little interior parts of the city, they are going to them and they are asking, put your shop on the main road, our building is there. We'll give you at a little lower rent also. Because this fellow is not earning anything. No. Now, if you go and ask an existing fellow who is operating under this building, you go and tell him that, see, we have a very extraordinary big building here, newly constructed, all new facilities are there, more closer to the main road, you shift your business here. The owner of this business says, see, already a particular building, I have taken it on lease from some other party. A lease is valid for another 2 more years. Whatever price you are offering here, a price is very tempting, but a lease is still there for a period of 2 years. I want to come, but I can't come. Then lessor says, ante kada, what I will do is, you terminate the lease contract. Whatever penalty you have to pay in this existing contract, that I will reimburse. Who is reimbursing? E-building ka lessor is reimbursing the termination penalty of existing lease contract of this existing building. Then this lessee says, or this businessman says, istavanko, kani, my all these materials, goods and all, again I have to travel from here to there, no. Then lessor says, ante kada, relocation costs also, మనం స్పాన్సర్ చేసిందే సార్. సో రిలొకేషన్ కాస్ట్ ఆల్సో హీ విల్ రీంబర్స్. అది కూడా ఓకే. నో, ఈ బిల్డింగ్లో సమ్ ఇంప్రూవ్మెంట్స్ అండ్ ఆల్ ఐ హ్యావ్ డన్ టు సూట్ మై బిజినెస్. మరి నీ ఎగ్జిస్టింగ్ బిల్డింగ్లో ఆల్ దట్ ఆర్ నాట్ దర్, అగైన్ ఐ హ్యావ్ టు ఇంకర్ దట్. లెస్సార్ సేస్ యూ ఇంకర్, అది కూడా మనమే. సో ఎనీ లీజ్ హోల్డ్ ఇంప్రూవ్మెంట్స్ యూ డూ ఇన్ ద న్యూ బిల్డింగ్, in new building leasehold improvements also, this fellow is going to contribute some portion of that. That means you observe, sir, he is giving you so many kind of benefits to become a lessee there. Now, once you become lessee, you have to anyway pay him lease payments, fixed, variable, guaranteed residual value, option price, termination penalty, all this you will pay. But there are certain things which are going to recover from that fellow also. whatever you are going to recover, that will be reduced from the lease payments. While for the purpose of computing this lease liability today, future lease payments you will discount it now. Future lease payment minus any lease incentives receivable in future. That you have lease payments are payables no. From that lease incentive receivable you have to minus. Net payment you have to discount it to today. Sir, but we have one doubt, sir. Relocation cost is something that has to be paid first, no? Relocation cost, when will you get reimbursement? Normally, after start of lease or before lease? It should be agreed before lease. I will tell the lessor that I will carry all my goods to your building using your own money, or I will carry, pay me money right now. So, even before a new building came into your hands, relocation cost might be reimbursed by lessor to the lessee. That should not be adjusted in this. Why I am telling you, why you should not adjust that type of lease incentives is, look at the language I wrote. Lease incentives, future lo receivable, not what already received. You are standing on which date? Accounting is done on which date, sir? Commencement date. So, after commencement date, if something is payable, something is receivable, discount them. Before commencement date, if he has already paid you, why will you call it as a lease liability? Liability means what? Something which I have to pay overall. So, all my outflows, net of inflows, I discount it, I work out a liability today. But he has already paid me something, or I paid him something before the commencement date only. Why will I call it as a liability? Liability means what, sir? Something which is due. But before commencement date only, for example, as a lessor, I gave advance rent, sir. Advance rent is not included in this lease payment. Why not included? Advance rent, when did you pay? Before commencement only you paid. Why will I call it as a liability? Is it a liability? Sir, liability means what, sir? What is payable becomes liability. That's why our lease payments heading, whatever I wrote, all these are futuristic cash flows after the commencement date. After standing on commencement date, in future, whatever I am going to pay minus any incentives I am going to receive, our net cash outflows, you discount it to today, you get a present value, our present value, the lease liability entry you write. So, that is standard ka goal. Server, what will you do with the amount which you already paid? I will tell you that one by one. So, prime being is, sir. So, how many items are there? 1, 2, 3, 4, 5, 6 items are there. Okay, right. C point to rate now. We'll make a chart kind of thing, sir. Lease payments include fixed payments and in substance fixed payments. Not every variable payment, only this type of variable payment which are linked to inflation index, market interest rate and all. option price. Sir, in this, tell me, guaranteed residual value given by lessee or any party on behalf of lessee. Who is that any other party on behalf of lessee? Sir? Whatever I write, you are copying nicely. Hopeless people. Tell, who is that anybody who will give guarantee on my behalf? Bank? Group company. Who, sir? Broker. Broker can give guarantee. Parent company can give guarantee. These people, the parent company, the intermediary who has set up this deal, these people are capable of giving guarantees to the lessor. Lessee, see sir, for example, sometimes lessee wants to give guarantee, but lessor says, I don't want your guarantee. No, I mean to say, suppose sir, you want to take a loan, you went to a bank. He says, bring one reputed person who is capable of giving guarantee to you. You took me. Looking at my dress and all, he said, eat up, fuck So, for giving guarantee also, some range should be there. Okay, so, okay, listen. So, for example, I want to give guarantee for the asset what I am taking on lease, but lessor might not like my guarantee. Your guarantee is as good as you don't give any guarantee only is what he is telling. When I am taking loan, how can I myself give guarantee? Some people will not accept that. So what I do, I take my parent company ka guarantee. So here who is giving guarantee to the lessor is not me. Parent company is giving. Suppose this kid he spoiled the car, sir. Ultimately car value 0. Lessor we have to pay 5 lakhs. Namesake I am saying we gani, who is we? Not I am not paying. My parent company will pay 5 lakhs. Why? That fellow gave guarantee. I did not give guarantee. No. He will pay 5 lakhs. Sir, if he is paying 5 lakhs, why are you including this in your lease payment? Because prima facie it's implied that in a guarantee transaction, if somebody pays on your behalf, we again have to pay to them. So even though parent company eventually might pay some guarantee compensation to the lessor, our parent company again I have to pay. That is the purpose with which I am including there. So guarantee given by me or any party on behalf of me also has to be included there. That is the logic for that. Anyway, write a note point. Any variable payments other than based on inflation oblique market interest rate are not to be included in above lease payments. They are recognized as expense in pure. So total 6 items of payments you have seen. Okay, fixed, variable, guaranteed residual value, termination penalty, option price, and lease incentives. All these are included in the term called as lease payment. Why we have to understand what is lease payment is, if future law all lease payments whatever are there, our lease payments you have to discount it, a present value you have to record against lease liability. So whatever we discussed above, they are not expenses, sir. Are we outflows? Discount it, present value will come, pass your journal entry for lease liability using that. In that, what you should not discount is these things. For example, you have to pay some rent based on number of customers you have received, number of units you have manufactured. That type of rents are not included in your lease payment definition. Idi E.Srinivas we used to call this as contingent rent. Contingent rent was never included as part of your minimum lease payments definition. Whatever we are calling it as lease payment here, the E.Srinivas we used to call as MLPs. A MLP definition of contingent rent should not be included. Note point 1 is that only. The contingent rent should not be included. Note point 2. Or else wait. Not note point 2, point D point 2. Right. Discounting rate to be used. Now, which discounting rate you have to apply for this? See, lease payments you identified, okay, but discounting rate, how to work out? In this, standard gives you 2 choices, but more than choices, you should call it as preferences. So, first preference, and if it is not possible to work out this for you, then you go to the next preference. Interest rate implicit in lease, shortly called as IRIL. Interest rate implicit in this lease transaction, with that you should be discounting the cash flows, lease payments. Sorry, IRIL ante what will I understand, sir? You will not understand. That is IRR of lessor. Correct only. Lessor ka IRR, lessee should find out. IRR to you have to discount your lease payments. Sir, lessor ka IRR, how will I know, sir? You will know, I will tell you. But some cases, if you do not know, then you can't apply first preference, you'll go to second preference. Second preference is incremental borrowing rate of lessee. Incremental borrowing rate, the name itself tells you what is the meaning of that. What is the meaning of incremental borrowing rate? Lessee, as of today, directly goes to the bank, says, bank, I want a loan. At what rate bank is willing to give a loan to you? A rate to discount it. That means nothing but your borrowing rate, not your existing borrowing rate. Sir, balance sheet lo 4 loans are there, sir. 4 loans ka weighted average I will do. No, not your WACC, not your weighted average capitalization borrowing rate, what you used in India is 23, not that. If you take a fresh borrowing today, at what rate can you raise the money? A rate to you have to do discounting. Second one is easy to understand. First one I will tell you, sir, but I am not going to make you write this because the lesser relevant. Lesser time I will make you anyway write. Timing, just listen with an example. Now, sir, you are thinking from lesser point of view. Okay. Not like this. Okay. Sir, this fellow is walking, sir, on the road. Okay. Here, he saw a flight, sir. Okay. Now, love at first sight, sir. He went to buy. Sir, he went to buy, sir. What happened is, then he realized that empty pockets are there. And he came back. Future lo lot of earning potential is there, but today cash is not there, just like you people. Of course, some of you are having lot of cash also, but still. So, this fellow sadly coming off here. Now here, Y Limited, one company he saw, who is owner of asset, father of girl, what is this service? Sir, we do asset financing companies. Normally they will be formed as an NBFCs, okay? So, the asset financing company, since asset financing and written, no, so this fellow went there. See, aeroplane I want. So, kindly give it to me at least on lease basis. Y Limited understood the future potential of this lessee and he says, let us do one thing, let us enter into a lease transaction. Now lease transaction, how it actually happens is, normally what we think is, lessor is the owner of the asset, no? He will be already having some hundreds of assets with him. I go there, I pick and choose not this, like that, and take this asset on lease. It won't be like that, sir. Lessor is not as stupid to buy all the assets in the world and keep it in a godown and keep waiting for lessee, one day he will come on. No. Lessor, until he is asset owner only, but he won't have that asset also. He will have money, sir. He will have a lot of money, lessor. So you first go and set a deal with him. Then what lessor does is, Y Limited buys this asset today, right now, after finalizing the deal with you. Once they buy the asset they will give to X Limited. X Limited is a lessee here. And this boy every year has to pay lease rents or lease payments, like how the standard uses. So here you observe, sir, Y Limited bought the asset using its own money. Correct? Y Limited bought the asset using its own money. And it is collecting the recoveries from X Limited, the lessee. Now, if you are lessee, don't you know how much return Y Limited is making in this transaction? Don't you know this? What's the cost of new airplane? Don't you know? You know. How much you are paying to Y Limited? Don't you know? You know. Based on that, can't you work out a IRR calculation? So, how much return Y Limited is making will be known to the lessee in most of the cases. E case particularly he will know. Why? Asset cost X Limited also knows. X Limited also knows that Y Limited is making a profit from me. X Limited also knows that Y Limited is charging interest on me. So X Limited definitely is, X Limited lessee, sir, he definitely knows what return Y Limited is making out of this transaction. So our discounting rate you use for your lease payment calculation. So just put yourself in the shoes of lessor for some time, understand what kind of return lessor is making. That only we call it as interest rate implicit in the lease, which is nothing but IRR of the lessor. Use that as the discounting rate for present valuing your lease payments. That's what you do. Suppose you say, sir, Y Limited is already having aeroplane, sir, which he bought it for some other customer 4 years back. Now asset is already there with them. Now that asset is already there with them, asset ka fair value you might not know. So IRR you may not be able to compute. Therefore, second option they gave you. What is second option? When you don't know the internal rate of return of the lessor, you take your borrowing rate and discount it. Discount what? These lease payments. Because ultimately lease liability is a borrowing only, sir. Sir, you understand ROE asset account debit to lease liability account entry might be sounding new to you, but think of it like this. Sir, when you buy an asset for cash, what is the entry rate? Asset account debit to bank. Asset purchased on credit. Asset account debit to vendor account. And entry is, sir, asset account debit to vendor account. Only thing is, this is not a straight purchase. It is a purchase indirectly under a lease transaction. So, a vendor account place I am using the word called as lease liability. At the end of the day, that is a borrowing, sir. You borrowed money, a borrowed money to purchase a asset. But borrowing, your borrowing rate only should apply. No, that's why second preference law they gave you incremental borrowing rate of the lessee. IBR is the discounting rate you will use. So, I'm clear here? Chalo, sir. The IRIL ki formal definition is that we will see later on, sir, when we do from lessor's perspective accounting. Okay, with this what we finished off is lessee books law, first entry law, lease liability portion, at what amount you should write. We decided this already, just now. Next, what is pending is ROE asset should be recorded at what point? The last point, sir. A, B, C, D, E point. Total 5 items are there. I will tell you one item. Whatever lease liability you computed above, that much ROE asset you have to debit. Pakka. Some extra also you might have to debit. Extras you should guess and tell me. Present value of future lease payments. Some amount came, no. The lease liability, no. Lease liability, ROE asset also. But ROE asset, some more expenses also will be included. Guess what? Installation cost, yes, will include that. What else? But generally, installation cost is something which lessor only incurs and he gives the asset to you. Okay, anyway, other than that. Borrowing cost. Borrowing cost, why will you capitalize? Yes, it is ready for usage, no? It is qualifying asset. Then? Sir, for entering into lease transaction, we have to incur certain legal charges, drafting agreement, valuation charges, all these charges can be capitalized, sir. So, that standard calls them as initial direct costs. Next. Any amounts paid to lessor before commencement date. Sir, whatever ROE asset to lease liability entry is there, entry you're recording on commencement date. But after inception date and before commencement date, in case you happen to pay anything to the lessor, amount ROE asset today you have to debit. Sir, why is this not included in lease liability? Lease liability is paid or payable? But payable, why will you include in that what is already paid? That is the reason lease liability low, whatever is already paid will not be included. Payables only will be included there. But whatever you already paid, that also you paid for ROE asset only, no? So asset you are adding that. Next. Present value of decommissioning, restoration, or any similar obligations. This is coming from your Ind AS 37, Ind AS 16 also. Okay, PV of decommissioning cost you have to capitalize to the cost of the asset in a point you already know at that point. Minus any lease incentives received from lessor before commencement date. From shifting from existing building to new building, I received some compensation from the lessor. That must be minused from the ROU asset. In net figure to ultimately you have to capitalize the ROU assets. So lease liability calculation is very important. Based on that, ROU asset capitalization will start, and ROU asset further expenses directly incurred, all legal expenses, installation costs, any capitalize all that, and any amounts you have paid already before the commencement date, that also you paid for asset only, but this number won't be included in this because lease liability considers only future lease payments. But if whatever is already paid, that also you paid for this asset only, no. So now you add separately. Decommissioning liability, this is not lease liability, it is separate liability. So the separate liability create jesi asset ki again you have to add it here. Lease incentives, sir, lease incentives already lease payments will be deducted, no. No. What we deducted there, go back and see. Receivable lease payments are deducted. Future low, if lease incentives are receivable, that you are minusing from lease payments what are payable in future. But what about lease incentive already received, that you have to remove it from the ROU assets, sir. So guys, this is about your accounting part, initial part. Next, in this only, actually you can record this as a separate heading also, but no, here only I'll write F point. Subsequent measurement. Okay, first day you recorded ROU asset nicely, you recorded lease liability also. Subsequently, what is going to happen to them? Further accounting of these two accounts, what will you do? In this, one you know very well, very well. Which one? Lease liability. Guess how to account that? Somebody told the answer correctly. Him, sir? No. Unwinding of discount, correct. Yes, very good. ACM you have to apply. Lease liability recognized at what value? Present value of future cash outflows. Is it not similar to your fair value of initial recognition liability in ACM method? Hereafter every year what will happen? Interest expense you will be booking, unwinding of discount. Whatever lease payment you have to pay, you will pay. Closing balance will be there. Again next year, at 5 years or 10 years or whatever lease term is over, by the time that gets completed, lease liability becomes zero. So lease liability accounting is very simple. So here you just have to write apply similar to see, it's good that instrument standard is done. So here and there references will be there in all these standards now, 115, consolidation, combinations law. links will be there. A links you will easily understand. ACM and you know what is ACM, you know what is FATPL. Anyway, now tell me, sir, ROE asset sitting as an asset in your balance sheet, what will you do with that? Now to provide depreciation, okay, but if you go to your what is this PPE standard, you have two choices. No, what are the two choices? Cost model or revaluation model. Here revaluation model is not permitted. Why not permitted is, what you are capitalizing is not asset, you are capitalizing ROU asset. Suppose sir, asset ఉంది sir, asset life 40 years, I took it on lease only for a period of 4 years. So in my books asset ka full value will appear. No, 4 years ka lease payments ka present value will be appearing in my balance sheet as an asset. How can I fair value it? Asset ka fair valuation, when is it done sir? When full asset నీ దగ్గర ఉంటే you can go and do fair valuation. You 50 years life lo 4 years life worth of asset is there with you. For that fair valuation is not possible correctly. So fair valuation is not allowed, sir. So measured using cost model. If you are applying cost model, tell me sir, what is your carrying amount? Initial amount recognized minus accumulated depreciation minus any accumulated impairment loss. So on doubt, asset life 10 years, I took it on lease for 4 years. Depreciation I should be providing over a period of 4 years or 10 years. Asset overall life 10, but lease period is only 4 years. So ROE asset should be depreciated over a period of 4 years or 10 years. 4 years. What if a lease contains an option to buy and I am reasonably certain to exercise that option? Then you have to depreciate the asset over a period of 10 years. Reason, when you have an option to buy and that option is likely to be exercised, option price also is already included in your lease payment, which eventually came into ROE asset also. Are you understanding, sir? That's why ROE asset must be depreciated over the full life of the asset, not over your lease term. So lease term you will depreciate, life of the asset you will depreciate, depends on whether that option to buy you are going to exercise or not. Okay, so if eventually asset is going to, if lessee is going to buy the asset, then life, otherwise only lease term. So right sir, a star mark you put under the ROE asset side only you write depreciation is to be provided over the lease term. However, if there is an option to buy the asset and it is reasonably certain that such option will be exercised, then depreciation shall be provided over life of asset. Sir, one last point is there. With that, we can go to the sum, sir. That last point will be slightly confusing. So pay attention to that. So till here, I hope accounting law, there is no doubt. Accounting law, sir, only 5 points we wrote. First, I happily write that entry that you have to remember in your mind. Our entry, what amounts you have to record. First, we have to understand lease liability amount. First, ROI asset you cannot write. Our lease liability, first you have to work out. Our lease liability calculation law is 6 payments are possible, sir. It's not like all 6 will be there. Sir, this and this cannot exist simultaneously. You must understand that. GRV option plus rent at lunta, sir. GRV means what? Asset going back to the lessor, I am promising a particular amount. How can that be there when there is an option to buy and I am reasonably certain to exercise that option, and the asset eventually is going to be my own asset? No, in that case, GRV will not be there. So it's like all possibilities I wrote. It's not like all 6 will be there in all the questions. It won't be like that. This paka will be there generally, sir. This may be there, may not be there. This will be there, or this will be there. Out of these two, one will be there. This may be there, may not be there. This also may be there, may not be there. So you just have to understand the possibility there. Okay. In this, variable payments issue will be there, sir. What is that is? We said that include variable payments that are based on market index or any inflation rate and something like that. And variable payments which are based on reasons other than this, like usage, number of units, customers, production units, sales units, such type of variable payments don't consider for the purpose of lease liability calculation. Whenever it is paid or payable, book it off as an expense in your P&L. Don't bring that into liability valuation and asset valuation. Okay, that's the guidance we gave. Chalo sir, this we will not bring. Okay. Now how to measure this one? Things are understand like this. This is 0, sir. First year rent is 1000. Second year, third year, fourth year, fifth year, sixth year, 7 years. This is my lease period. Every year, lease rent is going to increase by way of LIBOR, sir. Market lo whatever is the interbank offering rate, I will see. Our rate to every year 1000 should be increased. First year I have to pay 1000. Okay. This is lease payment. But here how much I have to pay? 1000 plus LIBOR at the end of first year I have to take. So, this number I do not know. This number also I do not know. This number also I do not know. Here I do not know. I do not know. I do not know. How to compute I know. Amount I don't know. Is it variable payment only? Yes. Variable payment based on index or market interest rate only? Yes. So is it part of your lease payments? Yes. That means the present value of this has to be worked out or not? For computation of lease liability, I have to work out. But I don't know. But after 1 year, what will be the interest rate? How will I know today only? I don't know. Then how to do this? How to do this? You understand the problem? The problem is lease rent is going to increase every year based on some market interest rate or consumer price index or some index. Based on that, every year lease rent will change. And that is a variable payment which has to be considered for lease liability calculation today. Now my question is, how will you estimate that? Whatever standard gives a guidance is, stand here. You are anyway standing there only, commencement date. Go and see what is your LIBOR today. Suppose your today LIBOR is 10%. For all lease payments, apply 10% completely. For all lease payments, you will apply 10%, sir. That means 1100, 12, 10 like that. You estimate and you discount everything and do accounting today. Sir, but every year 10% is wrong. No, sir. Every year 10% is wrong. But time being you do that. After 1 year, you will know the reality. When you come here, you will understand next year lease rent will not be 10%. Sorry, next year increment is not 10%. Suppose market interest rate is 8% only. Then instead of 1100, it should be 1080. Take 1080 and again remeasure your liability. So, when future lease payments are variable, you take today's rate and apply for all the lease rents in the future and discount it, work out lease liability today. Future whenever new information comes, again we can remeasure the liability. Sir, But every year writing 1100 is wrong, no sir, wrong A. But I don't have a choice. There. So today you do that approximate accounting only. Later on when information comes, again we can update like that. So that's what you got to do. So directly Samla will show you. After that I'll make you write a note. So with this many concepts we have done. So questions also many things we can do. What is the last question we solved? 15, 16, 17 over. 18 also over. Please come to 19th question please. Yeah. Sir, variable lease payments, ultimately what you have to remember is, on the commencement date, whatever data is there, with the help of that data, you estimate the lease payments. Are we wrong? Estimate that like that only. Later on, we'll again remeasure the liability. Anyway, come to this question. Entity M and lessor A enter into a 10-year lease of an office building for a fixed annual lease payment of 2 lakhs. As per the terms of the lease agreement, annual fixed lease payments comprise of 1,70,000 rupees for rent and 30,000 for some taxes. What are the fixed lease payments for the purpose of classifying the lease? Sir, there is a 10-year lease of a building. Every year I have to pay 2 lakhs. Our 2 lakhs lo 1,70,000 rent it seems. 30,000 is reimbursement of property taxes it seems. What is your lease payment? And he is asking. 2 lakhs or 170? 2 lakhs. 30,000 is part of the contract only. Yesterday what did we discuss? A reimbursement of taxes, frankly speaking, not a lease component. At the same time, it is not even a non-lease component where I am getting some goods or services. This is something which is simply agreed to pay, because if I don't agree to pay, I don't get the building itself in the first place. So, reimbursement, admin charges and all, you have to allocate it to lease and non-lease components. Asli contractor non-lease component not there. What you have is only one lease component. So 30,000 will be allocated to 1,70,000 only. Hence your total lease payment will become 2 lakhs fixed. Entity Q enters into a 7 years lease for a piece of a machinery. The contract sets out the lease payment as follows. If Q uses the machinery within a given month, then an amount of 2,000 accrues for that month. So if I start using within 1 month, then I have to pay you 2,000. If Q does not use the machinery within given month, then an amount of 1,000 accrues for that month. What does it mean? If I use, I will pay 2,000. If I don't use, I will pay you 1,000. So anyway I have to pay you how much? 1,000 is fixed. It sounds like variable, but it's not variable. In substance, fixed repayment. Sir, my extra 1,000, sir. Extra 1,000 I will pay only if I use the asset. And that is pure variable. But a variable, what will I do? Tell me, sir. Extra 1,000 is linked to usage of the asset. Since it is linked to usage of the asset, that should not be included in computation of your lease liability. Directly throw it off into PRL whenever you pay. Lease payment calculation only 1,000 should be included, which is the in substance fixed payment. Next one. Entity P enters into a 5 years lease of office space with entity Q. The initial base rent is rupees 1 lakh per month. So monthly 1 lakh have to pay. And rents increase by higher of 1% of our entity sales or 2% of previous rent rate on each anniversary of the lease commencement date. It means what he's trying to say is, normal base rent is 1 lakh per month. Once 1 year is over, second year lease rent will increase. Increase by how much? Increase by e company lessee ka sales lo 2%, sorry, lessee ka sales lo 1%. One amount will come, keep it aside. Last 1 lakh whatever you paid, on that apply 2%. One amount will come, keep it aside. Compare whichever is higher. By that much you have to increase. For example, my lease rent last year is 1 lakh, no? Now 5% of my company's sales you see. Let's say that came to Okay, last year lease rent, 1 second, sir. Last year lease rent is 12 lakhs, 12 months ki 12 lakhs. 5% of my sales came to, let us say, 1,50,000. 2% of last year previous lease rent. 12 lakhs into 2%. How much is that? 24,000? 24,000. Whichever is higher. How much I have to pay? 1,50,000 I have to increase next year completely. Suppose 5% of sales is not 1.5, that is only 15,000. Then I have to pay 24,000. That means in any case I have to pay how much? 24,000 extra the pakka I have to pay. I might have to pay more than that also. More than that if my sales ka 5% is more than 24,000. And 24,000 is the pakka I have to pay, no? So 1 lakh is fixed. 24,000 is a in substance fixed payment that has to be included, sir. See, I don't know what will happen to your sales, but what I know is 2% higher than last year rent, pakka I have to pay. Incremental 2% is a fixed payment only. Though it sounds like variable, that is a fixed payment, it has to be included. Right. Company N leases a production line. The lease payments depend on the number of operating hours of the production line. N has to pay rupees 1,000 per hour of usage. 1 hour I use, I have to pay 1,000 rupees. Directly linked to usage, sir. If I don't use, read further. The annual minimum payment is 10 lakhs. Means whether you use or don't use, 10 lakhs pakka you have to pay, sir. Expected usage is 1,500 hours. That is waste information. Now tell me, sir, how much is your lease payment? 10 lakhs. That is pakka fixed, sir. 10 lakhs you have to pay. 10 lakhs, 1,000 per hour, like if you compute, that is coming to how many hours? 1,000 hours. 1,000 hours ki 10 lakhs out, sir. If you use more than 1,000 hours, then the extra payment what you are going to pay are the variable rent purely based on usage that has to be debited to P&L account as an expenditure. That can't be included in lease payment. This is variable lease payment estimation. It's a good question, sir. An entity enters into 10 years lease of property. The lease payment for the first year is 1,000. The lease payment are linked to consumer price index, which is not a floating interest rate. Doesn't matter. Index calls it's okay. The CPI, the price index, at the beginning of first year is 100. Lease payments are updated at the end of, end of every second year. At the end of year 1, CPI is 105, and at the end of year 2, CPI is 108. What should be included in the lease payments? Listen, sir. Very good. Very good. What is the lease period given? 10 years. Carefully understand, sir. It's very important. It is small sum. Based on this, big sums are there. So you can't afford to get confused here. Sir, CPI, Consumer Price Index value today is given as 100. What he says is, from here to here, first 2 years ki, lease rent fixed, sir. How much? 1,000. We won't update anything. So here I have to pay 1,000. Here I have to pay 1,000. Sir, for third year ki, how much will you pay? What he says is, every 2 years ki lease rent will be updated. No. What you have to do is, second year ending ki, what is the CPA you have to see. Is samla 108 and they gave you, no. So 108 unte, what you have to do is, if 1,000 is the lease rent, when CPA index was 100, if CPA index is 108, then how much will it be? 1080. So up to E 2 years ki I will be applying 1080 up to these 2 years. Okay, next. Fourth year ending ki one more CPA will be there. Based on that, again next 2 years ki lease rent will be updated. Like that, actually you have to pay lease rent. Computing lease rent whenever CPA is given is not tough. Problem comes with accounting. Because CPA at the end of second year, when will you come to know? End of second year. But accounting, when you have to do? First day, 0 time you have to do. Why? All the lease payments you have to estimate and you have to discount them to today. But a 108 and a number won't come now. A 108 number will come only at the end of second year. But discounting I have to do today, sir. Entry have to write today. So what will you do? How will you estimate? So, E 1080 correct, but a 1080 today you will not know. What our standard guides you in this state is E2 are okay, sir. Here, what amounts I don't know. Do you know today's CPA? Apply that only for all periods and measure it. That means CPA 100 if the amount is 1000. Assume today's CPA only for all 10 years. So 100 CPA how much? How much will it be? Cross multiply 1000 only. So everywhere you take only 1000 and discount them. Work out your not LP, LL, lease liability. Like this will work out. Sir, but these are not the cash flows what you are going to pay. No, sir. Yes, these are not the cash flows what I am going to pay. But what are the cash flows I am going to pay? I don't know. How will I know that today only? I don't know. No. That when will I know? As the time progresses, I will know. So first year ki, based on this lease liability, whatever you got here, E amount to, you go shamelessly write ROU asset account debit to lease liability. Lease liability first year ending ki, interest cost to lease liability. Lease liability account debit to bank. First year ki, second year ki accounting you do. Now you came to where, sir? Second year ending ki you came. Second year ending ki, will you know consumer price index in the market? Yes. CPI now is 108. Now tell me, sir, based on the CPI, do you know third year and fourth year current? How much will be third year and fourth year current? 1080, 1080. Now 3, 4, 5, 6, 7, 10 and count, sir. What I know, E1080 I know, E1080 I know. Sir, E boxes I don't know, no, sir. All these boxes are 1080 only now. Standing today, whatever index is there, that only you should apply for all the payments. And now what actually, remeasurement we haven't yet discussed, but I'm just telling you what is going to happen in accounting part. Second year ending key, after you record this accounting, you have to again go and remeasure the lease liability. Remeasurement means again work out the present value of all future cash outflows. Now this time your cash flows will be 1080s. How many 1080s? 10 1080s. Discount it to end of second year. Update your lease liability. Sir, corresponding effect, where will it go, sir? ROU asset it will go. ROU asset increase, decrease like that. Again, fourth year ending, one more CPI will be known. Fifth year, sixth year, seventh year, eighth year, ninth year, 10th year, updated CPI, you have to measure the lease payments. Like that, it goes on continuing. What is not correct is, you standing on first day and saying that, I believe that CPA at the end of second year will be so much, and your estimations are not accepted. Estimations are not accepted in this. So now read the answer. At the lease commencement date, the lease payments are 1000 per annum for 10 years. That fellow won't give you full explanation, sir. That's why I have to write and show you. At 1000 per annum, sir. Today CPI 100 first day ki. All years ki 100 every year ki it will be 1000 only, no? Like that he got 1000. The entity does not take into consideration the potential future changes in the index. At the end of year 1, the payments have not changed and hence the liability is not updated. Sir, is samlo lease liability ka remeasurement, when will it happen, sir? Each year, every 2 years ka? Every 2 years. First year low, whatever 105 CPA he gave, I trap, sir. Don't touch that. Next. At the end of year 2, when the lease payments change, the entity updated the remaining 8 lease payments to 1080 per annum. What is the remaining 8 lease payments? 3, 4, 5 to 10. అవన్నీ 1080. Actually 1080 is only for 3 and 4. But 5, 6, 7, 8, 9, 10 I don't know. But still you will apply 1080 only. Atla again at the end of 4th year you will update for 5th, 6th, 7th, 8th and like that you keep on doing. Like that. 24th one later on we'll solve, sir. 25th one. Sir, if you can answer this, then you are really pro. Entity A enters into a 5 years lease of an office building. The lease payments are rupees 5 lakhs per annum, and the contract includes an additional water charge calculated at rupees 0.50 per liter consumed. Payments are due at the end of the year. Stop there. Sir, I took a building. E building ki every year 5 lakhs I have to pay. Plus extra water consume ki every liter of water ki I have to pay 50 paise. Ante sir. Sir, you observe closely. It will completely lease and non-lease. There is lease also, non-lease also. 5 lakhs is pakka lease payment. A 0.50 per liter whatever is there, the water charges are non-lease. What is the treatment of this? Normally water charge, you purchase water, sir. What is the treatment for that? Capitalize. Water, sir, water you purchase, consume it off, throw it off in P&L account. If you are directly throwing it off in P&L account, the 0.5, what you are saying is, sir, I am separating the lease and non-lease component. Correct, no, sir? Lease ki separate treatment, non-lease separate. But E.Standard also gives you choice of not separating also. Can I treat the entire contract as a lease contract? Assume that I have exercised that practical expedient and I want to treat the entire contract as a single lease contract. Now tell me what is to be done with 0.5. 5 lakhs is anyway lease payment. A 0.5, what should I do? No, sir. Now, even if you say that a water charge is also part of your lease contract, then a 0.5 will become a variable lease payment based on consumption, which anyway should not be included in your lease payment. Then also it will come to PRL. You separate also, it will come to PRL. You club also, it will come to PRL, but with a different name. If you separate it, water charge and a name that will come. If you club them, treat them as a single contract, then variable lease payment based on other than market index rate and a name that will come to PRL. Ultimately 0.5 will come to PRL. Yes, sir. 26. An entity enters into a lease and guarantees that the lessor will realize 20,000 from selling the asset to another party at the end of the lease. So, promise made is 20,000 asset ki value untundani promise chesam, sir. At the lease commencement, based on the lessee's estimate of the residual value of the underlying asset, the lessee determines that it expects that it will owe rupees 8,000 at the end of the lease. Indirectly what he is saying is, asset ka value will be only 12,000. But I promise how much? 20,000. How much is the shortfall? 8,000 I have to pay or not? He is asking whether lessee should include this 8,000 in the lease payment. Of course you have to include. 100% will not come. Entity L, 27th one. Entity L enters into a lease for 10 years with a single lease payment payable at the beginning of each year. The lease payments are 1 lakh. Lease payments will increase by the rate, not or sir, of. The rate of LIBOR each year. At the commencement of the lease, LIBOR is 2%. Assume that IRIL, discounting rate, is 5%. How lease liability is initially measured? Sir, listen. Here every year lease rent is increasing. Increasing at what rate? Market interest rate, which is nothing but LIBOR, not 2%, LIBOR. And LIBOR every year I have to pick up from the market and then I have to update it. But next to 10 years ka LIBOR, how will I know today? I don't know. But today's LIBOR I know. Today's LIBOR is given as how much? What you do, take 1 lakh, every year, next 10 years ke apply only 2%, 2%, 2%, 2%. Are there the real cash outflows what you are going to pay? No. But today lease liability calculation, you do computation like that. Later on each year, whenever new information keeps on coming, you keep on updating your lease liability value again. Remeasurement has to be done, sir. That's all. Somehow, one mistake what people can do is, lease payments are made at the beginning of each year. So when he wrote year 1, that is not year 1 ending. That is year 1 beginning. Year 1 beginning ante right now. PV factor is 1. So there you should be careful. Normal at table 1 and first year PV factor is a pothun sir some. So here beginning of year and last month, sir. Or else timeline lo write 0, 1, 2, 3 if you want, like that you write. I would have written 0, 1, 2, 3, but anyway, study matter solution is like that, so you try to understand what they gave. Sir, question number 28, please. Entity Y and Z executed 12-year lease of a rail car, the following terms on Jan 1, 2016. The lease commencement date is Feb 1, 2016. Wait there. Sir, they execute means the agreement date, sir. So this is your basically inception date. Commencement date is on Feb 1st. Entity Y must pay, sir, actually. Entity Y must pay Entity Z the first monthly rental payment of rupees 10,000 upon execution of lease. That means on inception date only, Y has paid an amount of 10,000 advance rent they paid. Entity Z and lessor will pay Entity Y 50,000 rupees cash incentive to enter into the lease payable on lease execution. That means on inception date only, lessor is paying to the lessee an amount of 50,000 also. Entity Y incurred 1,000 rupees of initial direct costs which are payable on Feb 1, 2016. Entity Y calculated the initial lease liability at the PV of lease payments discounted using its incremental borrowing rate because interest rate implicit in the lease could not be readily determined. That's okay. And the initial lease liability is 8,50,000. Question: how should lessee company measure and record this lease? Now they are asking basically a first entry they are asking, sir, main entry. Is study material sum only. Without giving accounting, he gave only the numbers there. But you have to write proper full accounting, sir. Example, if this question comes, he is asking how will you record this lease? You draw the table and leave, you lose marks. Okay, so table is just for computation purpose, but ultimately you have to draw the accounting part. Or you start with accounting, a table requirement also will not be there. Start, sir. Sir, all theory type of questions we can go through. Number questions is better we solve. At inception date. What is the inception date given? Jan 1. Huh? Jan 1 ki sir, you cannot recognize any asset or lease liability, but transactions are happening. You paid advance lease rent. For rent paid in advance. Advance lease rent account debit to 10,000. Not only that, our lesser fellow gave us lease incentive of 50,000 for lease incentive receipt. Sir, advance lease rent account, lease incentive account, they are not going to stay forever in your books of accounts. They will be adjusted to ROU assets account anyway. So whatever name you want to give, you give for them, no problem. Anyway, they will die. Execution అంటే inception. Execution is agreement date, no? Right. Next date. Now coming to commencement date. At what is the commencement date on Feb 1? Sir, you want a single short entry or separately you want it? Single short entry you want, huh? If I write a single entry again, you have to write side low all individual entries. Why to do overaction, sir? Then why did you ask, sir? Just to know what you feel. Are you still the same or you changed any test and nothing, no change? See this fellow lessor, he paid some, lessee, he paid some expenses. How much expenses? 1,000, huh? Not there, huh? Direct costs. The legal fees or whatever fees it is, account data not there. Just write direct cost account debit to bank. 1,000. For recognizing ROU asset and lease liability. ROU asset account debit. Don't write any amount against that. Leave one line also. Now write 2 lease liability. If lease liability is present value of lease payments, amount is given to you as 8,50,000. Amount you write. Okay, sir, 8,50,000 correspondingly you have to debit it to ROU asset. But ROU asset even has to be increased with the amount of our direct expenses also have to capitalize. Not only that, even this also. Payments made before commencement of lease also has to be capitalized to ROU asset. So, E entry lone you offset them. So, 2 direct costs or direct expenses, whatever account you use, that 1,000 and advance lease rent. Okay, now you can actually write this total against ROU asset, or there is this lease incentive, no? That also you can debit here, write some amount. This will be becoming a balancing figure. Or why to do so much of effort at once? 850, 10, 860, 8,61,000. You write the entry. For adjusting lease incentive received to ROS. Lease incentive, you understand it like similar to a grant, sir. When you receive a grant, asset value should reduce, no, like that. Lease incentive to ROU asset. These 3 entries you can club also and write. Right, sir. Go to the next question. Question number 29. Here, before we go there, just conclude this. Therefore, initial recognition of ROU asset is equal to what all amounts you have capitalized? 8 lakh 61,000 you capitalized minus 50,000 you removed, so it will be 8 lakhs 11,000. In second interview, call this as a balancing figure. That should do. Please go. 29th question. Company H leases an aircraft for a period of 5 years. The aircraft must undergo a planned check after every 1 lakh flight hours. So it's a kind of restructuring cost kind of thing. At the end of the lease, Company H must have a check performed or refund the cost to the lessor irrespective of the actual number of flight hours. What he's trying to tell is, I take the asset on lease for a period of 5 years. At the end of 5 years, when the asset is going back to the lessor, I have to do a check in the sense a restructuring kind of expenditure, sir. You remember India 16 law we discussed major overhaul expenditure, that one. A major overhaul expenditure either I should incur or I should pay money so that fellow will incur on his own. What are the lease payments for the purpose of calculating ROU asset? Sir, amount of whatever overhaul cost is there, which either you have to incur or you have to pay, will it be part of your ROU asset or not? And he is asking. Definitely yes. Definitely yes. Because on first day only we know that we have to pay and there is no option to avoid that. You can't say that, sir, I traveled only for 95,000 hours, therefore I will not incur. Irrespective of the number of hours operated, you have to pay. So it's definitely part of your lease payment, sir. Liability law you have to include and correspondingly ROU asset law also it will be included. It's something similar to your decommissioning cost, similar to that. So you have to definitely capitalize and include this. Okay, 30th one. Entity ABC, brackets of lessee, enters into a 3 years lease of equipment. Entity ABC agrees to make the following annual payments at the end of each year. First year 20, second year 30, third year 50. For simplicity purposes, there are no other elements to the lease payments. Means termination penalty, option purchase, all that is not there. Direct costs and all not there. Assume a discounting rate of 12%. Our 12% is nothing but entity's borrowing rate, it seems, because the interest rate implicit in lease for the lessor, this fellow could not work out that. Entity ABC depreciated the ROU asset on a straight line basis over the lease term. That means 3 years. How would entity ABC would account the said lease under India's 116? Very, very cheap sum. Our step number 1, 20, 30, 50 cash flows are the lease payments. Discount them to today. Present value will come. Recognize lease liability. ROU asset also same amount only. Why? Lease incentive not there. Direct cost not there. Advance payments not there. PV of decommissioning liability not there. Lease liability, ROU asset both will be recognized at the same time. What will same amount? Lease liability, what accounting will you do? ACM accounting you will do. Every year you will be adding interest cost minusing the lease payments. Over a period of 3 years, lease liability account will become 0. ROU asset means you have to depreciate it over the 3 years period. That too straight line method. Do you need to solve this? You will understand this, no? Right? So he has done 77,364. That is the present value. Our next table is ACM table, sir. Lease liability accounting. Then he wrote entries. He wrote a direct entry, sir. Interest account debit, lease liability account debit to bank, depreciation to ROU asset. Directly he wrote. You write in your own style what you already learnt in financial liabilities, financial instrument standards. We'll do this, sir. In a bigger question, I'll make you solve this. I guess this one will solve. Company EFG enters into a property lease with entity H. The initial term of the lease is 10 years with a 5 years renewal option. So 10 years is definitely non-cancelable. The life of the property is 40 years and the fair value of the leased property is 50 lakhs. Company EFG has an option to purchase the property at the end of lease term for rupees 30 lakhs. Ante once lease term is over, I can buy by spending another 30 lakhs. The first annual payment is rupees 5 lakhs at the beginning of the year with an increase of 3% every year in the beginning thereafter. So, beginning lease rents, some you should be little careful, sir. Many people make mistakes in doing present value calculations and also messing up doing ACM table also. So, be careful with this. Beginning up. Anyway, the implicit rate of interest is 9.04%. IRIL is given to you. Anyway, the discounting rate for you. Company H gives company EFG an incentive of rupees 2 lakhs which is payable at the beginning of year 2. Ante first lease rent I will pay, second lease rent when I am paying with this hand, I will also receive 2 lakhs from the lessor, which is to be used for normal tenant improvement, other leasehold improvements. Company EFG is reasonably certain to exercise that purchase option. That means at the end of 10 years, we are going to buy the asset by spending 30 lakhs. So when you are estimating your lease payments, 30 lakhs also has to be included, guys. How would EFG measure the ROU asset and lease liability over the 10 years, over the lease term, he's asking. Anyway, start, sir. In your notes, we write. Question number which one? 30? Sir, make 4 columns, sir. Also put the heading, calculation of lease liability. Year beginning. Lease payments. PV factors at the rate of, they give you IRILC. How much is IRIL? 9.04%. Sir, first year beginning means right now, sir. In brackets I'm just writing for this alone today. So that here PV factor confidently first write 1. Otherwise mistake will happen, sir. Unnecessarily lose marks. Anyway, how much lease rent you have to pay on this day 1? 5 lakhs. Hereafter every year lease rent will be increased by 3%. 3% fixed only, no? Right? So, second year lease rent, very carefully work out in the brackets, sir. First see, later on at once you can write. Don't write, watch. 5 lakhs plus 3%. How much is that? 5 lakh 15,000 you will pay. He will give you 2 lakhs. So here what you will be writing is 3 lakhs 15,000. 5 lakhs plus 3,000 is 3% is 5 lakh 15 minus 2 lakhs, net to 3 lakhs 15,000. P factors later on we can fill up, not a big deal. Coming to third year. 5 lakh 15,000 was last year lease rent. Lease payment is 315, but last year lease rent was 5 lakhs 15,000. On that, sir, will the lessor agree if you pay 3 lakh 15,000 plus 2%? No? No, should be careful. So 5 lakh 15,000 plus 3%. Do the math. 530 450. Here on notes, no adjustments, sir. Go on adding 3%. Don't show the calculations also. Directly go on writing. So Somebody stole my calculator. Okay, no. Five 4 6 3 6 4. Some people are thinking, why unnecessarily taking trouble? Answer, let's printed. Hopeless people, some people like that only copied third column heading also. Wrongly printed. For all these shortcuts are there, you should know how to use. Sir, 11th year means not 11th year ending, no, that is 11th year beginning or 10th year ending. Since heading lo we wrote beginning years and so I just continued 11. Actually 10th year ending. Anyway, now work out the PV factor, sir. 1 divided by 1.0906. No, 04. 1 divided by 1.0904. First year into second year beginning, sir. Against that you write this PV factor. For one kid is 1 only because 1 is today itself. So, sir, that fellow in the solution he used 2-digit PV factors. Ideally you have to use 4, sir. That is safe always so that your answer will be correct. See, it's not about initial accounting. If you do stupid approximation, lease liability account last will not tally, sir. Too much of chance you should not take. 4 digits if you keep, approximation error also will be minor. Otherwise, your approximation error will be more than your interest cost. Chala bago, sir. You'll get doubts on yourself only. So, keep PV factors 4 digits. So, 0.9171. People don't know how to approximate also. 8411. See, your disease is coming to me. 0.7713. Yeah, you multiply all this and tell me the final number. 50 lakhs you got, huh? Okay. That's not the correct answer. That's the answer you'll get when you use 2 digits. 49 lakhs, 99,999. ఆ వన్ మాత్రం ఎందుకు వదిలేవు దొరికిపోతావనా do write 50 lakhs, no problem. 75. నీ వాయిస్ హైలైట్ అవ్వాలనే కదా జరిగింది. So this is your present value of lease payments. If you see carefully, you are really smart. A 50 lakhs question they gave, sir, somewhere. Read. Actually, even if you see, Actually, even if you don't compute this, if you are smart enough, you must have understood. I told you what is IRIL? That is IRR of the lessor. Lessor bought the asset today at 50 lakhs. He is collecting all this from you. How much return he gets? Adi IRIL. Adi you are using it as discounting rate. So IRIL is nothing but IRR of the lessor. Future cash inflows discounted to today cash outflow. Cash outflow today for lessor is asset purchase only. So adi IRR for him, for you adi cost. So present values will be same. 50 lakhs only. You should have observed that. But anyway, you should have thought about this before. Anyway, so journal entry on not cheating, you apply that, they won't give you marks. Did they give you dates? Huh? No dates. Okay, nice. ROU asset account debit to lease liability 50 lakhs. 50 lakhs. Then he is expecting you to do accounting, sir. Now he is asked, what did he ask? How would EFG measure ROU asset and lease liability over the lease term? He is not asking how will you account for ROU asset and lease liability. How would EFG measure? Measure ante amounts if you give, that is enough. Accounting entries not required. Until what you should do is prepare a ACM table for 10 years and prepare depreciation column for 10 years. How nice. Do sir, do. Your ACM table, the format what I told you is year 1, 2, 3, 4. But here 1 to 10 you have to write. That many columns you will not have, Gavati. You invert the table. Okay, enjoy. Okay, fine. Listen. We will not do anything like that. We will do normally only. Or wait, sir, wait. Sir, there is a small thing you must know. If you don't know that, you will get confused. So listen, watch this carefully, then you can copy. Don't write when I am writing. Sir, when I do ACM table, normally we write particulars. You don't write, I told you. So wait. When I said wait. Watch. Tell me, sir, what will you write in particulars call? Opening balance. Then you add interest. Interest at whatever rate they gave you, you will apply that on opening balance only, no? Right? From that you make the contractual cash flow. E context flow, we use the word called as lease payment. Then you will have the closing balance. Normally like this only the story goes on, sir. But if somebody observe closely, your lease payments are payable at the beginning of the year. Ante nee opening balance 50 lakhs on, sir. But first payment is paid right now immediately. Andu mee interest undadu, sir. Sorry, 50 lakhs I borrowed from you. Now only I paid 5 lakhs. So ee year ki interest I have to pay on how much? 45 lakhs. Ee format is the pothun, sir, some. Are you understanding, sir? ACM table ide. But ee ACM table will work only when cash flows are payable at the end. But when cash flows are payable at the beginning of the year, you have to interchange the second and third row. So first what you do is, first remove the lease payment and then on the balance you have to apply the interest. A balance manaki kavali kabatti here one total also you need. On this you have to add, means on this balance you have to again add interest at whatever rate is there, and then that will become your closing balance. Normal ACM table what we are used to, we did so many sums on that. Our ACM table will work if cash flows are payable at the end of the year or no cash flows are payable at all. Only last rate is payable. But when cash flows are payable at the beginning of each year, you continue with your original ACM table, you will be computing interest on the opening balance, which is wrong. Sir, I borrowed from you 50 lakh rupees. Today only I paid you 5 lakh rupees. How much is outstanding? 45 lakhs. So first year interest will be computed on 45 lakhs. If you follow the original table, you will be recording interest at the rate of 50 lakhs means interest will be computing, which is wrong. So అందుకని టేబుల్లో ఆ రోస్ యూ హ్యావ్ టు ఇంటర్చేంజ్ సార్, కేర్ఫుల్. ఓకే, సో నౌ దట్ వీఆర్ ఇంటర్చేంజింగ్ ద రోస్ ఆల్రెడీ, ఇఫ్ కాలమ్స్ ఆల్సో ఇంటర్చేంజ్ అండ్ ప్రెసెంట్ లైక్ దిస్, యూ విల్ గెట్ కన్ఫ్యూజ్డ్. యూ కంటిన్యూ లైక్ దిస్ ఓన్లీ. ఫస్ట్ 5 years, once it is done, remaining 5 years we will do. Right sir. ASM table, brackets are right. Lease payments are paid at beginning of each year. So you'll understand that a table, this is the reason it is not looking in the usual format. You don't have space, write only 1, 2, 3, 4, no problem. 5, 6, 7, 8, 10, 10 separately I'll write. Chalo sir, let's start filling up. On the very first year beginning itself, you are paying an amount of 5 lakhs. You can see the lease payment computations, no? From that you remove 5 lakhs. So outstanding balance for you is 45 lakhs. On that 45 lakhs, 9.04% interest. $4,06,800. So this will be 49,06,800. Right, next 49,06,800. Second year net we are paying only 3,15,000. So it will be 45,91,800. On that 9.4%, 415,099. This is kind of labor work, sir, but there is no choice because advance payment lease rents you should know how to handle. What is third year lease rent? 530,450. The answer printed down there, they presented the table in a way, our table will be correct for interest computation, but closing balances will be wrong in the table if you see. our balances and that fellow's balances will not match and our answer only is correct. You can very clearly see first year ending key, he is showing this balance. You can see the answer printed in the solution. First year ending key, sir, closing balance and he is showing this. 45 lakhs 91,800. When is it coming, sir? After you pay 315. 315 end of first year I am not paying. When am I paying? Beginning of second year. So end of first year technically when you prepare the balance sheet you will have only this balance. So answer whatever is printed is not right, sir. But you do what is right. Because later on some other question you will face a trouble. You will learn half of things. You fit it normally to whatever extent you can fit, because you have to see from the screen I am writing this. Okay, opening balance fifth year beginning it is 47 lakh 26,618 minus lease payment. How much is fifth year beginning? 562. You could have saved 5 minutes time had we prepared 1, 2, 3 columns like that, but already format I'm changing, so just E-sum, let's do like this. Sir, a number should become 30 lakhs, sir, and here the liability should become 0. 11th year beginning low, the moment I purchase 30, pay 30 lakhs, all my contractual cash flows are over and I should not have any lease liability, which means 11th year beginning my liability should be 30 lakhs. Under 10th year ending also it should be 30 lakhs. So 10th year ka interest, please take it as a balancing figure. If IRIL was correctly computed, it will match exactly. Otherwise, it's okay. 30 lakhs minus 2750, 787. How much are having? 2 lakh 49,213. It's balancing figure, sir. You can't do anything for that. If you directly compute, it's coming to 248,671. Actually, it's 249. So that's hardly any difference. Actually, some 400, 500 rupees difference is that. That's okay. If your IRIL is even more detailedly computed, instead of 9.04, 9.0387, whatever is there, everything include, then correctly only it will come. But that will take another 10 minutes time to get the answer. So guys, this is about your lease liability accounting, sir. Coming to asset accounting. Accounting of ROE asset. Sir, Marie, see the question what he asked and answer what he wrote, they both are not matching. But you see what we have to do. Ideally, we'll do that. Sir, what he asked in the question is, how would EFG measure the ROE asset and lease liability over the lease term? Lease liability over the lease term we have shown. But ROE asset also over the lease term we have to show, no. But he didn't do that. He gave only the each year depreciation will be 1,25,000. The reason why he did not show is lease liability is 10 years life, sir. But asset, now that you are buying the asset life is how much? 40 years ki depreciation cheyali, sir. 40 years ki table evada ayyaru, sir. So that's why he adjusted it like that, and that's looking okay, fair. Chalo. Right. Since the asset is likely to be purchased by lessee, it's appropriate to depreciate ROE asset over the life of the asset. Sir, over. Okay, put the next heading. Sir, listen, not like that. Sir, sir, only 15 minutes. Only 15 minutes, sir. Please, sir. Or some we will do tomorrow only. Concept alone. Concept to listen, write notes. Some next session I will solve. Right. Put the heading, sir. See, you all know about yourself. You'll come late in the morning as usual. So you'll come on time, huh? You will come on time. Okay. Doesn't matter. Right, sir. Reassessment and remeasurement of lease liability. So sometimes whatever factors you have taken for measurement of lease liability on the commencement date, if any of that factors low revision comes, revision means because of change in estimate, if any revision comes, then whatever liability you have already measured, a liability is not correct anymore. So a liability has to be remeasured. Now, first understand the situations when reassessment is done or then when remeasurement is required. Example number 1 is a basic example. Sir, originally the lease period is 5 years, sir, with an option to extend for up to 8 years. Standing on the very first day, I thought that originally the lease term is only equal to 5 years. Means option to extend was there, but I thought I will not exercise it. Now, 1 year, 2 year, 3 year is over. In the 4th year, standing here, I feel that the extension option will be exercised. And when are you saying this? Standing at the end of year 3 you are saying. But whatever lease liability you already created in your books, that was representing your payments only up to 5 years. But actually it should represent up to 8 years. So the existing lease liability is wrong, sir. You got to remeasure it now. Because there is a change in the lease term. Lease term change not because of modification. Is modification, reassessment. Reassessment. What is the difference between reassessment and modification? Modification means what is not originally there in the original lease agreement, you and lessor are now changing the terms and conditions. That is modification. It is not terms and conditions. It is once upon a time what I thought I am changing now here. So this is a reassessment because of change in circumstances. In this reverse also is possible. What is reverse? Originally I thought that lease term will be 8 years. Now 3 years is over. Now I feel that I am not going to extend it. So my lease liability will be measured with a high lease payments now, which I have to reduce it and cut it short only for remaining 2 years now. So lease term lo change can come. This is one example. Another example is lease term 10 years, sir. 7th year lo I can pay termination penalty and get out of this contract if I want. When I was standing at commencement date, 0 time ki, I thought that termination penalty I will pay and therefore lease term is only equal to 7 years. So if this is your assessment on the commencement date, tell me, sir, lease payment slow, termination penalty will be included or will not be included? Will be included. Now let us say 5 years is over. At the end of 5th year, he believes that lease will not be terminated and lease will be continued up to full 10 years. Now, because of this reassessment, you have to do 2 changes now. What are the 2 changes? Asal termination penalty should be removed from your future lease payments. Not only that, 8th year, 9th year, 10th year lease rents also should be included in your lease liability. So definitely you have to remeasure the lease liability because of your reassessment. Reassessment is different from modification. Modification next level we will study. Adi also similar, but that is much more deeper than this. It is change in estimate kind of thing, sir. Okay, another example. దీనికి reverse only you can take. What is the reverse? Originally I thought that I will not terminate, therefore full 10 years ka lease term I thought, full 10 years ka lease payments are included without including termination penalty. But after 5 years I feel that no, I will terminate the contract. Now lease payments also has to be reduced and termination penalty also has to be introduced into your lease payments. So that type of sum can be there. And then asset life, sir, 40 years. But lease term is only 10 years. Where at the end of lease term, I have a option to buy the asset. Standing at first day, I thought that option to buy will not be exercised. Option to buy will not be exercised. Option to buy will not be exercised ante a option purchase price will include it in my lease payment, or I will not include? I will not include. So just normal lease payments of next 10 years, I included, I measured the lease liability. Now 4 years is over. At the end of 4th year, this fellow feels that a asset, I am going to buy it eventually. That means at the end of 10th year, he is going to exercise that option. So if you are going to exercise that option, your lease liability account should allow for that. But it is not allowing now presently. Why is it not allowing? Originally you did not include option purchase price. But now you have to include and remeasure the lease liability. Reverse also possible. What is reverse? Originally thought I will buy and I included. After 4 years I decided that no, I will not buy this stupid asset. So our lease liability lunch option price ka present value you have to eliminate now. So remeasurement requires like this. Like this GRV also. What GRV? First I thought that towards the end of 10th year I need not pay anything to him. So I did not include anything. After using the asset for 4 years, I saw asset worst condition is already there. So pakka we have to pay full amount and I decided. So GRV include in the lease payment and remeasure the lease liability. Like this, sir. Similarly, GRV termination penalty example I have given. What else? Variable payments, important one. What is variable payments? Already discussed with you. Sir, standing today, first year, second year, third year, fourth year ki CPI index I don't know. So what did I do? All years I kept only 1000, 1000, 1000 and I measure the lease liability today. Now 2 years is over. I am standing here. I know that today's CPI is consumer price index is 108. So what I have to do now? Remaining all periods now I have to keep 1080 and you have to remeasure your lease liability. Are you understanding, sir? See, it's a simple way, sir. Lease payment calculation low, we have included some fixed payment, variable payment, termination penalty, GRV, option purchase price. We included all this. No, if in any of those changes comes, then definitely lease liability value also has to be updated. Updated, we are calling it as remeasurement. Change coming, we are calling it as reassessment. Clear, sir? Now, how to account this? Now, general idea is like this, sir. Remeasure the lease liability to reflect present value of future lease payments. Carrying amount of lease liability, something will be there already in your books. At the ACM table is there, you will know that. This should be brought down to or increased to this amount. For example, carrying amount is 5 lakhs. Remeasured lease liability, which should be equal to present value of your revised future lease payments. The amount, let's say it's coming to 5,30,000. So liability value from 5 lakhs, you have to update it to 5,30,000. Tell me guys, what entry will you write? At least half you should know. 2's lease liability 30,000. Correspondingly, debit will be given to ROI asset. So decrease it, what will you do? Reverse entry I will write. Lease liability you update, corresponding impact, happily go and give it to ROI asset. No complication, nothing. A point is there, sir. Only one complication. The complication is, when I ask you to compute present value, what discounting rate will you use? Already one EIR is there with us, correct? No, existing discounting rate is there. Can I use that or should I go for a new discounting rate now? The standard says, in 2 cases, you have to use the latest discounting rate, a new discounting rate you have to work out. In all other cases, old discounting rate you will continue. What are the 2 cases is, when there is a change in the lease term. Change in the lease term example, whatever you are seeing on the screen, not this. This one. First I thought 5. At the end of 3rd year I reassessed, no, not 5, overall 8. ఇది చేంజ్ ఇన్ లీజ్ టర్మ్. ఆర్ ఒరిజినల్లీ ఐ థాట్ 8, now I'm reducing it to 5. ఇది చేంజ్ ఇన్ లీజ్ టర్మ్ ఎగ్జాంపుల్. ఈ కేసులో యూ హ్యావ్ టు యూజ్ ఏ లేటెస్ట్ డిస్కౌంటింగ్ రేట్. మీన్స్ యాజ్ ఆన్ టుడే what is IRIL, or as on today what is your incremental borrowing rate. New discounting rate you have to apply. When there is a, because of your reassessment there is a change in the lease term, that can be increase or decrease. And because of your reassessment you are impacting your option to buy. That means originally I thought I will not buy the asset, but now I decided to buy the asset. Or originally I thought I will buy the asset, now I decided not to buy the asset. ఈ అసెట్ పర్చేజ్ ఆప్షన్లో చేంజెస్ కమ్స్, దెన్ ఆల్సో యూ హ్యావ్ టు యూజ్ లేటెస్ట్ డిస్కౌంటింగ్ రేట్. ఇన్ ఎనీ అదర్ కేస్, అంటే టర్మినేషన్ పెనాల్టీ ఆర్ నాట్, టర్మినేషన్ పెనాల్టీ ఇస్ అగైన్ ఇంపాక్టింగ్ యువర్ లీజ్ టర్మ్, నాట్ దాట్. జిఆర్వీలో చేంజెస్, what variable lease rents, in all these cases you will continue with your old discounting rate. So the accounting is very simple, sir. Just have to remember when to use new rate, when to continue with the old rate. That's all. Only two cases లో new rate. లీజ్ టర్మ్లో చేంజ్ కమ్స్, న్యూ డిస్కౌంటింగ్ రేట్. అసెట్ పర్చేజ్ ఆప్షన్లో చేంజ్ కమ్స్. పర్చేజ్ ఆప్షన్లో చేంజ్ కమ్స్ మీన్స్ వన్స్ అపాన్ ఎ టైమ్ ఐ థాట్ ఐ విల్ నాట్ బై, నవ్ ఐ డిసైడ్ టు బై, ఆర్ వైస్ వర్సా. ఈ కేసులో ఆల్సో న్యూ డిస్కౌంటింగ్ రేట్. ఇన్ ఎనీ అదర్ సినారియో ఎగ్జిస్టింగ్ EIR విల్ బి కంటిన్యూడ్. దట్స్ ఆల్, సార్. దట్స్ ఆల్. ఓవర్. రైట్ దిస్ పాయింట్. రైట్ దిస్ పాయింట్. ఈజీ ఓన్లీ, రైట్. You don't write it, huh? Tomorrow you want to write, huh? Okay, tomorrow you can write. I will write now only. You write tomorrow. Bad joke, huh? I know. Maybe joke is settled about the baavatu. Lessee has to remeasure the lease liability to reassessment of any factors relating to lease. Example, change in lease term. Do one thing, ఈ ఎగ్జాంపుల్స్ ఐమ్ రైటింగ్, ఇది 1 by 1 you write, so that ఆ ఫస్ట్ 2కి న్యూ డిస్కౌంటింగ్ రేట్ అని యూ కెన్ రిమెంబర్ ఈజీలీ. చేంజ్ ఇన్ ఆప్షన్ టు బై ద అసెట్. Change in amount payable towards GRV. Remeasure. Example, so next line write. Remeasure the lease liability to a value which is equal to present value of reassessed. Reassessed place lo revised and also you can write, no problem. Reassessed future lease payments for computing present value use revised discounting rate. If there is change in lease term or change in assessment to by the asset. Sir, ఈ two cases లో revised discounting rate. Use original discounting rate in any other case. Last line. On remeasurement, any increase or decrease in lease liability shall be correspondingly adjusted to RPSM. That's it. A kind of a change in estimate or reassessment. Estimate also is not correct. Change in reassessment is a correct word. Guys, if you've copied this, you can pack up for today.